Welcome, everyone, to this episode of Perpetual Perspectives, powered by Vest Exchange, where we believe traders deserve markets built to protect them. By the way, Vest is around the midway point of season one of the points program. You can earn rewards for trying out Vest. Check it out today at vest.exchange. I'd love to get your feedback on the exchange. You can drop into the Discord server to engage in discussion. So today, I know it's been a while, but it's going to be worth it, I promise you. Today, I have the honor and pleasure of having with me BullyDCrypto on Twitter. I believe he hasn't done a discussion like this before, so this is his first time ever. So I'm really looking forward to this. He's been trading crypto for a while, starting with a relatively small portfolio and growing it with an insane amount of screen time on perps. I just deduced that based off some of the posts that I read from him, and we'll get into that as well. He posts some great educational content, and often I see him have a very similar way of interpreting the market as how I view it. So this is going to be a really interesting conversation. Without further delay, let's get right into it. Thanks for taking the time out, Bully. I know we've been playing this for a long time, and I'm glad we're finally able to make this happen. How's it going, first and foremost?
Yeah, hello. Going quite well. Thanks for having me on. And you're absolutely right. This is my first time having like an informal discussion or a formal discussion for that matter. So I've made educational videos in the past before, but nothing of this format. So really excited to come on and exchange some ideas with you.
Yeah, absolutely, man. Let's do it. First things first, if you could introduce yourself. And one thing I usually ask everyone is, how did you come upon that account name that you have on Twitter? Like, was there a story behind that?
So it's actually like a pretty basic story. So everyone who calls themselves a bully actually got bullied in the first place. So I actually skipped a grade two times in school, and then I was probably like the youngest guy across all sections that I was in, especially for the AP classes. So, got bullied a lot as a child, which explains my ability to stay indoors and sit at a screen for an extended period of time. So that's how that's how I got my ID. Initially, it was planned as I actually got into crypto in 2017, I believe, for the first time. But I was not active on socials, especially for a large period of time. I got into crypto Twitter in only in 2021, I believe. And since then, I wanted to have like a no fucks given account, but then I ended up uh, providing like the username just ended up being ironic, to be honest. So it's like okay, I the purpose for the entire Twitter account just ended up being how can I give people actionable strategies and how can I create a Telegram community that actually works together, finds alpha together, which I did not have, and I really wanted that when I was up and coming. So that's how it started.
Yeah, no, that's awesome. And speaking about your background and how you started trading, I'm curious to know, how did you get first exposed to crypto or trading? Is there, like, do you remember your first exposure to it, and how did you really start getting into trading?
Yeah, so I started with equities. Uh,
Okay.
yeah, equity initially it was individual stocks, then it was equity options. A really big winner for me was Tesla, and that was just I'm
Hmm.
back then I was just an idiot in college who liked Elon Musk, and the moment they went public, I just aped into it. So that was my first big runner, and as you can
That was a good
imagine,
bet.
yeah, paid off well, man.
Not too
So
shabby.
not too shabby, yeah. So it started with equities, Tesla. In 2017, the first exposure that I had to crypto was Neo. If you guys remember that, it was meant to be the next Ethereum. It never was, but the founder was likable. He seemed legit. I went to all his podcasts, and if you guys have seen The Big Short, it was my that's my quant moment. So there was a week where Neo went up like 6x within a very short amount of time, like with minimal pullbacks. And yeah, it was just a week
Hmm.
or 10 days. So that's when it really caught my eye because for equities, my strategy was always looking into stocks that are consolidating. And it was all obviously very easy because I was blessed to be in a post economic crash environment where every single economy in the entire world was just growing and growing and growing, right? We just had a period of 20 years where it's a bull market for every single stock index. So, and
Right.
this was obviously before COVID, but still, it's even if you account for the COVID crash, everything just kept on going up. So all of my strategies were based on consolidating coins, buying breakouts, which is the exact opposite of what I do right now, but that's how I started. And that's how I got into trading. Yeah. So my first
Interesting.
exposure, yeah, my first exposure was,
Yeah,
I
go ahead.
believe it was Neo. And then after that, it was mostly just trading futures for Bitcoin. Back then, we had all BTC pairs. Not so people did not focus that much on stables, but so it was just a race of how much Bitcoin you can accumulate. And to be honest, my the value prop that I saw in crypto since the early days, and this is I'm not taking credit for it. It was I have to give credit to my mentors back then who advised me that okay, the true value proposition in crypto will always be Bitcoin. So and it's just turning more and more true as this entire market matures, right?
Yeah, absolutely. Thanks for elaborating on that. And I have a follow up question because you mentioned mentors. Um, there's so much garbage in the space now in terms of information. Um, how did you seek those mentors out, and then where did you get your information from initially? I think a lot of people struggle with that, especially to start off, like even finding good information and then learning. So, how did that learning process look like for you? And did you actively seek out mentors, or what did that look like?
Yeah. So my bias toward like my approach to learning has always been find someone who does it well and then learn everything you can from them. So
Right.
it started with watching Mark Douglas videos on YouTube. It was about trading psychology in the beginning, and I was blessed to master the psychological aspect first before even getting to the charts, right? So Mark Douglas, I read Tom Hougaard's book, which I think everyone should read. I think it's
Oh yeah, that's one of
called
my favorites.
yeah, Best Loser Wins,
Best
I
loser
believe.
wins.
Yeah, yeah.
Yep.
So I think Mark Douglas, Tom Hougaard, these were my kind of the personalities that I followed to begin with. And in terms of equities, first I read Market Wizards. I read Jim Simmons' biography, The Man Who Solved the Market. And it just really inspired me to a point where, okay, this is because the place where I come from, trading markets is not really an occupation that's popular, right? And right now, obviously, things are changing across the entire world. Everyone wants to buy equities. Everyone wants to be a trader, at least part time. But it wasn't the same case half a decade ago, right? It was looked down upon, and
Yeah,
it seemed
absolutely.
like it seemed like a fucking Ponzi scheme, especially crypto. So
Yeah, I mean, I think it's still. I mean, I don't know what your experience is, but even now, if you tell the average person, they're just like, because they still remember the last cycle where there's that euphoria with all the money printing and stuff, and it's like, wait, isn't that done? I'm like, well, not really.
yeah, exactly. So
Yeah,
I kind of diverted from your question a little bit, but that's how it started. Okay, like who do I have access at a given point in time? So whoever is the best person that you think you have access to right now, just reach out to
right.
them, try to speak to them. I went like halfway across the globe to go to a conference where Tom Hougaard was speaking. I met him in person. It wasn't like a personal meetup, but I met him in person. I talked to him about a few points. I had yeah, I had my little diary with me, so it was a really nice experience. He actually told me that it's more about time spent in the market, and you keep learning every single day. And it has a much bigger impact when you actually speak to mentors instead of just reading motivational quotes on the internet, right? So that helped me a lot. When I got into crypto, I won't take the names, but it's actually a really useful space if you find the right people and if you put in the effort
Yep.
to reach out to the right people. So I didn't know anything about the space because I was in and out, like especially until like the COVID crash, I was in and out of the market,
Yeah.
just buying and selling at opportune moments. Just buying, it's the
Right.
same, you open a weekly chart, you buy discount, you sell premium, and that's about it. But after that, like 2021 was where I really honed in into the market and said, okay, I need to milk every single cent out of this market. And I just reached out to people on Twitter. I had a different ID back then. I was just a reply guy, but every single person was really helpful. And I know that's not the case with a lot of people, but I was fortunate enough to find the right people. And even now, I think I DM'd you one day out of the blue, and we exchanged some good ideas. The same thing happened with a lot of people that I interact with on a daily basis now, because in the
Yeah. No.
yeah, yeah,
Absolutely.
in the grand scheme of crypto, I'm still mid seven figures or something like that. So it's not, you're not a whale, but if you reach out to the right people and say that, okay, I want to work with you, or I want to just exchange ideas with you, you add value, you get value back. So anyone who's listening, my advice would be, your first interaction with someone needs to be focused on how you can make their life better, even if it's by 1%. And then you go on from there, and you'll 100% get value back.
Yeah, absolutely. I mean, I agree with you. I think I tweet about this pretty frequently, but I think what I say is that as long as you're not a dickhead and you're genuinely curious in terms of like learning, if you reach out to people, they'll definitely respond. That's been my kind of experience, and much like yourself, I've talked to many people that I didn't imagine that I'd be able to speak to and pick their brain on, and it's been very rewarding being able to exchange ideas and talk to people like couple years ago, I wouldn't imagine that I'd be able to talk to some people that are not my friends actually. So I think it's exactly what you said. I think it's good to put yourself out there, especially if you're not a dickhead and you have genuine curiosity to learn.
Yeah.
People usually help out, right? I think you've had the same experience as well. So I think that's really important because in this the barrier to entry in this space is really low. So if you're doing it alone and you're just grasping at straws, you need, and you mentioned this earlier about having a
Yeah.
community. So how did you develop that as well? And then we'll kind of switch gears and talk about sort of your trading journey and any difficulties that you face. But I'm curious in terms of developing a community or people alongside that you can share ideas with consistently. How did you go about that?
So when I talked about community, I actually had like a different thing in mind. It was like, okay, how can I give back? Because
Okay, I see. Yeah.
yeah, because it took even though we can summarize it in two sentences, but it's actually a long process getting to know the right people. Along the way, you'll also meet people that are just not good for you, or maybe just people who are LARPing. So that's a very real possibility. So you kind of have to go through the bad experiences to get to the good ones. I wanted to be that person for someone who's entering the space right now, which is why my current account, I started this, I think, on the precipice of the bull market, like when I was absolutely sure that we have recovered post the FTX collapse. That's when I started my
Yep.
Twitter account, and I wanted to record my journey, because it's actually been like a really rewarding couple of years, where especially in my crypto portfolio. So because I was early to the trend, so I was able to capture a lot of the upside, and I wanted to document it and say that, okay, anyone can start from 4, 5, 6 figures and grow it up. So that's kind of how the entire community building aspect started, wherein I finally felt comfortable that I do have value to share, and I think I can give people or information and give people some kind of mentorship, whether directly or indirectly, that I wanted in my early days. So that's how the community aspect started. And then in terms of getting to know bigger and bigger, more influential people in the context of markets, it was also that, okay, if you have an audience, it just opens more doors for you, right? and you have more credibility because you are doing it live. So that's kind of how it started, and now we're here.
Yeah, absolutely. No, that's commendable. We were talking about upside, and one thing I ask everyone is, and I think I read some of your tweets about you mentioning how difficult, like how much time you spent initially, like the scalping on lower time frames. So, what kind of difficulties have you faced over the course of your trading journey? Have there been any significant losses and obstacles? And how did you manage to come out on the other side of that? And how do you deal with obstacles now?
Okay, so in crypto, thankfully, fortunately, I haven't really blown up an account or just gone to zero, which I believe is the case for a lot of people. That happened to me with equities in 2020, like during the COVID crash. But that was my equity portfolio, so as long as you don't sell, you don't lose, right? So that was pretty fortunate that I was more focused on equities back then. In crypto, I think the biggest loss that I had was FTX because I had a
Hmm.
majority of my portfolio in FTX when everything went down. It was in stables, so I was able to get a lot of it out quite recently. I still have a lot of payments to go, but yeah, that was really like mentally challenging to the point where you feel like you've made it, right? And this is everyone listening just actually needs to make sure that unless you have the money in your bank account, it's not real. Okay, so so,
Right.
it's actually a huge mental setback when you see that, okay, I've made it. You make plans for your portfolio, you make plans for what you can do with it, and then suddenly the next day, like in literally one day, you go to sleep, you wake up, and the app or the website that you log on to every single day just does not exist. So yeah. So
Yeah. Yeah.
the only advice I have, to be honest, is if you are in that space, the only way out is through. I Number one, I do not think that unless you are at least a little bit financially secure. By that I mean like you can support yourself for maybe a year. Unless you have that, don't trade, especially perps, right? Get a job, get some security, and then keep doing this on your side. Make this your passion, and then eventually work your way up to doing this full time. That's number one. Number two, if you are in that space, the only way out is through. You have to drag yourself back up to the trading desk. You have to keep clicking and you have to keep moving forward because it actually sucks, and there's a lot of gurus who will give you psychological mantras, and there'll be a lot of people who say no, you have to master psychology, you have to keep it like completely emotionless, but that's just not practical, right? You can't do that. You can't separate yourself from your portfolio until you reach a point of security. So in that case, I would just say, just keep going on, keep learning, and the day you stop learning is when you actually start losing as a trader, because your edge will completely go away if you don't keep evolving. And that's about it.
Yeah, absolutely. I think there's a lot of bullshit in terms of like, I don't know if it's red pill or what the movement is, whatever, but it's preaches like, oh, like suppress your emotions, they shouldn't exist, and that's just not how human beings work. I think like, trying to say that you don't need to have emotions and suppress them and not being able to exhibit them is absolute nonsense. So I think yeah, you touch on some great points there.
Yeah.
Moving
Also,
on, I think.
just
Yeah,
to
go
add
ahead.
to that, it's we talked about this a little bit earlier, where you have to cater your trading style to your own personality. So if you know
Yeah,
that you are an emotional person, or you're trading with capital that you can't afford to lose, just size down. Like it's that simple.
exactly.
So that
Right.
that that's one thing. And also, like, if you have anything to add to that, I would love to hear how you handle like large drawdowns, if you had any, or how you advise people to handle them.
Yeah, no, I mean, I fortunately haven't had large drawdowns, so I haven't had to face that. But generally in life, and I'm not going to get into any personal stuff, but I've gone through a lot of difficult situations, and I think it's like you said. I mean, it really depends on what your ultimate like goal is, and to keep that in mind, and you have to just continue walking. I mean, really, if you look at a puddle of water that it isn't moving, it goes stagnant, right? It gets
Yeah,
bacteria, fungus, insects. That's what happens. I believe strongly believe that's what happens to us as well. So what really matters is like you continue moving in a direction and not stand still. And at the end of the day, like whether a lot of people are very get caught up in, okay, which direction should I move in? But I think intuitively we know which direction is the best for us in terms of continuing to keep moving and learning and growing. So I think, like you said before, I think it's just about continuing to move and learn and evolve at the end of the day. And yeah, you can't just suppress your emotions and just pretend that they don't exist. Obviously, loss, suffering, pain, that hurts. All of that stuff hurts. And at the end of the day, it's how what you learn from it and how you move forward.
yeah.
To be honest, so yeah, I think all the things that you mentioned, I completely agree with.
Okay.
Yeah. And what I wanted, because we were talking about, like individual psychology and mindset and how you trade. And what I wanted to ask you was, what do you think are your strengths and weaknesses when it comes to trading? And how do you remediate, your weaknesses? How have you like worked on those, or how do you stay away from stuff that you don't do well?
Yeah, I feel my strength lies in my curiosity. So I'm always actually like, if I see someone on Twitter post a new terminal, for example, I have to test it that day. So that's how I learned like a lot of about a lot of new tools, a lot of
Right.
new strategies when I started out. So even if it's, even if I know it's bullshit, I still want to open it, test it out, keep back testing constantly. So I actually spend a lot of time on the charts. Not so much right now, but when I started out, it was actually, and I shit you not, it was 16 to 18 hour days in front of the chart. And a lot of
Hmm.
people make
Yeah.
the mistake of just staring at maybe the 1 minute chart, which is good. If your goal is scalping the lower time frames, screen time is one of the most underrated things. If you open AGGR, and even if you just like listen to the sounds, you kind of mentally train yourself to act at certain points. Yes, that's important, but then
Yeah.
you have to document everything. There has to be an insane amount of documentation, and that's where I think my strength lies. We'll get into strategies. Like I would love to, just share some places where people can look for alpha. But just before that, I want to get into like my weaknesses. So I actually believe that my weakness is being a little bit too fidgety about my position. So I tend to over manage positions. So the way I learned to handle it was use spot effectively. So a lot of my trading is done on Bitcoin collateral. So if I'm sure about upside and we are at what I would consider a low pivot in the markets, I make it a point to deploy spot and not look at my P&L. So even when I'm trading, until I close a position, I don't look at the P&L number on the exchange. I just have that turned off because it, I believe that I take too many entries and exits, and that comes from a history of scalping on the 15-second chart for a really long time. So you can't alter your decisions made on the daily time frame when you're looking at the 1 minute time frame, right? So that was one of my weaknesses. The way through was managing spot inventory properly, and you can just do Bitcoin collateral, and also at any given time you can just create your own synthetic stable coin if you farm basis with it, right? So that's kind of how I manage that.
Yeah, no, that's great. And I think you mentioned some great points in terms of documentation and really understanding what you're doing, because I think that's what I've seen a lot of people fail to like journal or do any of that stuff, and the brain doesn't work that way. I mean, you have recency bias, so you're always
Yeah,
you can only store that much information, So I think what you mentioned in terms of documentation and really putting everything down, whether I was doing stuff for a long time, just pen and paper, right? Not even like using any journaling app and stuff. I was really literally doing it like analog and then using Excel sheets and that kind of stuff. But as long as you have some kind of system where you're putting stuff down, putting ideas down, seeing how they play out, what went wrong, what went right, all those things, I think that's really important. Um, the other thing that I wanted to talk to you about was, I mean, obviously, we're not going to get into your exact edge. I'm not going to ask anyone that, but in a few sentences or a sentence, like what do you think your edge is in terms of the market, whether it's whatever form of edge it is?
Yeah, so the one thing is you once you spend enough time in the market, and I feel like this is less talked about in trading circles, but I feel like you have to adjust your strategy based on your personality. So I feel like people who
Yeah.
have not gone through hardships or who have not had ups and downs in their personal life, I don't think they are really good directional traders, to be honest. Uh,
Hmm.
because it actually, if you want to grow a small portfolio, like I wouldn't do degenerate stuff as I was doing back when I was at four figures or maybe five figures, right? Because it doesn't make sense at my current size. But what allowed me to
Right.
take those risks was knowing that my, you know, knowing that life was much worse earlier. Losing a bit of money is nothing. So that's one thing. And a really good example is a friend of mine who's right now like doing extremely well, and the only thing he does is pair trading or statistical arbitrage, if you want to call it. And the way he justifies that is he does not look at markets as in terms of fair value for one asset itself. He finds it much easier to value one asset against the other, which is extremely profitable in a field like crypto
Hmm.
where you have multiple sectors and you have competing assets. Like every single L1 is essentially competing with
Right.
each other. Even if you want to dive further into that, like we had
Right.
this battle between like modular L1s, and then we had EVM compatible L1s and all of that. So it's much easier for him from a person who comes from a background of venture capital to value one asset against the other. So he does statistical arbitrage. For me, I come from a background where I've dealt with a lot of pain and turmoil in my life. So I have the ability to stay sane even when even in the worst of times. And it's not like I'm saying that, oh, I was in World War II or whatever, but it was, I believe that I have the ability to remain calm in those situations and also enjoy that to an extent. Like there's some people when the
Right.
market goes down, like last year in 2024, like we didn't even have that large of a correction, but when we had that like 49K August August pullback, like everybody was losing their minds. And the only thing that I saw in my group chats was, oh, do we buy this or do we buy like a move up and then a pullback or something like that? So that's it just has to be catered to that
Yeah.
specifically, right? So I feel like that's one thing. And then on the other aspect, like apart from psychology, I always try to back it up with data. We were talking about this earlier, where even the simplest of things, and
Right.
Robot James talks about this a lot, especially in his workshop, where as a retail trader, you have to give yourself every single edge that you can find. So if you have, let's say, a good trigger mechanism, you can look at certain patterns that, okay,
Right.
which day of the week has the highest gain, which day of the week has the highest uh, drawdown, right? So just to give you a nugget, because it doesn't work that much anymore. Like until quite recently, before we like had that entire rally to all-time highs, you had a Coinbase premium until 4 to 6 p.m. on Saturdays, right? And that is when like the market was put in the high for Saturday.
Hmm.
So if the market high was put in between Saturday 4 to 6 p.m. UTC and you had a Coinbase premium, the moment the premium went away, you could short it and then you could have like a week, and then you have like a CME gap, and you can play around with that. So you can catch a short at that point in time, and then you can catch a long, maybe if you deviate below the weekly open, right? So I feel like there's a lot of strategies out there. You just have to
Yeah,
give yourself
absolutely.
edge
Yeah.
in that scenario. Like,
Yeah.
let's say there's like the open deviation strategy. So we have the monthly open. If price goes below and then gets back above, you buy the reclaim. It sounds simple, but then at what point do you buy the reclaim? What is the average drawdown below a monthly open usually in an uptrend versus in a downtrend? Like, you can just keep farming for more and more statistical edges, and I feel you'll get somewhere where which puts you ahead of 99% of people. Yeah, yeah.
Yeah, I agree with you 100%. I mean, I think we can go down so many rabbit holes. Obviously, we have limited time, but you mentioned some great things. I think, like, really understanding behavior of participants in the market and understanding like what's standing out. Understanding the asset you're trading, like in Bitcoin. What does New York session look like? What has London been trading like? What has Asia been trading like? What's the average uh, rotation
Hmm.
period for a candle? What's the speed
Yeah.
of how Bitcoin is trading around a certain level? Like understanding those nuances. It's like learning a language, right? Like if you listen to language that you've never learned or heard before, it's going to sound like gibberish, right? So you really need to delve in and understand the behavior of the market and the participants around it. And it's like you said, like, you have to look for any edge that you can possibly get. Looking into sessions, how are sessions trading? Is something standing out? Coinbase, like you mentioned, Coinbase Premium. That specific example that you mentioned, stuff like that. I think is what can. There's so many different ways to go about it, man. It's like we discussed earlier. It really depends on your individual mindset and psychology, and you could take it so many different
Yeah, I
ways,
agree.
right? But it's all about putting in the work and putting in the time to understand that. Um, so one conversation that I've had with pretty much everyone that I've spoken to is um, around being a specialist in terms of there's some people that trade Bitcoin strictly versus understanding nuances for one or a couple of assets versus trading numerous tickers at the same time. Obviously, in this space, we've seen like once things start going in a certain direction because of the reflexivity and the momentum that builds up, it gets fairly forgiving, I would say, to trade if you have you understand how to manage risk and how to manage your positions. You can trade multiple tickers at the same time, and it's a forgiving environment. I know both of us know that there's a lot of people that made a lot of money doing this. Unfortunately, they lost a lot of money doing the same the other direction. So what are your thoughts on that? Is it better to just be very specialized or versus trading numerous tickers at the same time and just looking for general behavior? How do you approach that? I know you trade a lot of alts as well. I specifically trade alts when it's a certain environment, and I look for certain things when that happens. But yeah, I just wanted to see what you thought about that.
Yeah, there's a quote that I always go by. It's make hay while the sun shines, right? So I believe crypto is the most momentum driven asset class in the entire world right now. So when it goes,
Yep,
it doesn't stop. It's
it's
the
insane how positioning piles in is wild. Yeah.
yeah. So and then you have all of these people who are like who only look at taker flows and are like, oh, spot is selling into this dump, and then all it does is like a 2-3% pullback and right back up to the highs. So that
Yep.
whipsaw, that momentum that especially Bitcoin has, just because of how it's maturing as an asset class right now. I believe that trading alts, if you want to be that person who is long only or long biased most of the time, I think you have to do it when you're sure about momentum. So there are a few pivot points in the market where you get those change in flows, and then you look at those catalysts, and then you look at flows changing right after that point, and that's when you have to switch modes. So I used to trade a lot of altcoins. Right now, I am focusing on scalping Bitcoin a lot. because that's where I feel I have the opportunity to make money consistently. And also, as you get more and more
Hmm.
familiar with a particular asset, you get, obviously, like there's a lot of competition in Bitcoin, but it's also more, I believe it's more forgiving to trade Bitcoin than altcoins, because you can give yourself room to be wrong, and that in itself
Yes,
gives you an edge. Like the a risk premia in itself is an edge, right? So if you're able to
absolutely.
take on risk with certain uh, leniency, without blowing up, I believe that you can make a lot of money with Bitcoin. In terms of altcoins, I feel like when you see that momentum shift, it's much better to just position and wait. So just to give you an example, because I talked about, okay, macro catalyst and flows changing, it sounds like gibberish, but uh, let's take like the FOMC for example. So a lot of people like to talk about it, and it's always more often than not, it's a nothing burger, right? But I think it was in December when Powell came on, and it was the most hawkish statement that he had given
Hmm.
in probably like 3 years, right? And it was at that point, like it was just so obvious that it's not going to be a good time for risk assets. And additionally, before the election, like markets always dip, right? Sorry, like when the inauguration happens, like that markets always dip. So you already know that a new government is going to come on. There's going to be more economic policies come on. Obviously, nobody could have predicted the tariff war situation happening, but Powell in itself was a signal. How the SPX started trading after that was a signal in itself, and we had that entire move down, especially after the inauguration ceremony. I think Jan 20th was the all-time high back then, right? 110,000. So you had that, and then right now, like I think in the FOMC before the last one, you had. It was already like we were already off like quite a bit off the lows, but it was, I think, at like Bitcoin was trading at 85,000 when Powell came on, and then he said that the only reason we're not cutting is because of inflation risk from the tariffs, but it was probably like the tone had changed completely to dovish. And then you look at the flows, and Bitcoin has not stopped trading at a spot premium since 85K. And I think you can timestamp it to that day. The
Yeah.
spot premium has not gone away. The only time that it went away was when we made
Hmm.
our new all-time highs a few days ago. So it's just that having that macro catalyst, seeing that change in order flow, recognizing the change in momentum, and then you can alter your alt trading strategy. So and as I said, like for alt trading, I believe that having a stat arb mindset is really important, where you value one asset against the other. So in that case, like
Yeah.
if you want to trade, like you can capture the spread between that. A lot of people talk about ETH BTC, but instead of just looking at that chart and shit posting, you can actually capture a lot of basis points just farming the spread. Just place a few scaled limit orders on Bitcoin from current price and 5% lower, and the same for Ethereum, adjusting for beta, and then you just captured a beautiful spread, and you're not even paying that much funding. So that's how I trade altcoins. And as I said, like when you notice that shift in momentum, especially when we were at 84, 85K, I was actually buying like 70, 75 as well, but that was just for spot and saying that was a move on, okay, sentiment
Hmm.
is the absolute worst right now, and how much worse can it get? So you buy a little bit of spot. But then what was the confirmation signal? I believe that was in the mid 80,000s, where you had that spot premium, you had that macro catalyst, and that's when you could have bought altcoins.
Yeah.
And that's kind of what I did, like, because Hype, for example, also had a lot of major FUD, especially with Binance, and then so many
Yes.
people who bought after TGE. If you track the wallets, they capitulated during that time frame. So you could have bought Hype at like $14, and I tweeted about it. So and I think it went to like 40 the other day. So That's it. Like you for altcoins, I think you just have to time that macro catalyst and just wait for things to go your way.
Yeah, absolutely. I think you described that really well, and I think it's all a matter of like when I look at alts, it's all a matter of understanding positioning and reflexivity, right? And it's like you said, once momentum starts picking up, as long as you can understand relative strength in various sectors, you can really capitalize on those reflexive moves.
Yeah.
Um, yeah, so at the end of the day, I think for me, it just all boils down to positioning. I mean, if you look at Bitcoin, above the prior all-time high, perps were getting really aggressive, and you saw a spot wasn't sustaining that strength or wasn't agreeing with it,
Hmm.
and that's what ended up leading to the rollover. And it's really just fear and greed, like you said, right? At bottoms, like people capitulate, and those are the times that you want to look to get in, and those are the scary times. It's like when people don't want to pull the
Yeah.
trigger, right? And yeah, so I think yeah, everything you mentioned was great.
But yeah, and it's like, it's just as obvious because you just talked about like capitulation, right? So when you see a headline that the Nasdaq is in official bear market territory, like
Yes,
that
exactly.
you should, yeah, you should train yourself to just buy that. It's time to, even if you don't, full port then, which I don't think you should actually full port then, but if you have cash lying on the side and you hear headlines all over that, oh, like the US indices are in bear market territory, that's when you should start buying, in my opinion.
Yeah, absolutely. I think, one thing I really focus on is looking for areas that are going to offer at least some level of mean reversion. Like when you get to those points where there's all this news coming out where, oh, like we're in bear market territory and all that kind of stuff, it's a relatively simple deduction to conclude that, hey, there's going to be some reversion here at some point, because that's just how the market works. It's just fear and greed, and once you see like all this news coming out, and I think one thing, I don't know if you do this as well, but looking at how the market reacts to news when there's more and more bad news coming out, and at some point there's just
Yeah.
exhaustion. There's just exhaustion in one direction or another, and those are really good opportunities to position for a pivoting point.
Yeah, I agree because when bad news, I think Donald talks about this a lot. Like, and I'm actually quoting a lot of OGs here because
Yeah.
it's like you just go through the Twitter feeds and you learn so much. You
Yes, absolutely.
so if you're out there farming value, like I think the people I mentioned, you absolutely have to go through them. In fact, I have like a thread where I talk about, okay, how do you trade news? And one of the main things is just as you said, like when bad news stops affecting price, it's usually a good indication. And it's the opposite at tops because just now we had uh, quite a few like bullish catalysts, right? Especially
Yes.
for
Right.
Ethereum, I think SBET was making a play on an Ethereum treasury, basically the Sailor playbook. And simultaneously,
Yep.
you had the Trump media company announcing that they're going to buy $2.5 billion of Bitcoin. And all of this should technically push markets higher. But price did not really react to that much. So you know that, okay, they're going to get some sort of a pullback. Now, I'm not saying that we pull back from here till 70K again, but obviously we pulled back 6, 7%, I believe, so far. So it's usually these are pretty high signal if you know how to execute. Obviously, I do not believe in
Yes.
Bitcoin having a very large drawdown, at least for the next month or so. And also, we have a lot of price agnostic bidders right now. So I don't believe Bitcoin will have that much of a pullback. But for altcoins, a lot of them are already, especially against Bitcoin, they are breaking lows, right? Breaking the April 2nd lows. So
Yeah, absolutely. I think, just going further on what we were talking about, one thing I'd like to mention, and there's a lot of stuff that I learned from the Flow Horse as well. And one thing he talks about is keeping an eye on how much work the market is doing and what kind of reward it's getting in return. Right. And it's like, once you really know, I mean, this is just a statement, but converting this statement into something that's actionable. So, what things can you look at to understand how much work the market is doing and what kind of reward it's getting? I think really applies to what we were talking about earlier, where all this good news was coming out and it wasn't really moving price. Like you saw perps getting aggressive over the prior all time high, and there wasn't really much there wasn't really much spot strength. So that's kind of what led to the rollover. So I think those are certain things that you can really try to go from written wisdom or written statements and try to
Yeah.
convert it into something actionable. And what tools can you use to determine when that's happening? But I think we're going down like all these rabbit holes. There's a lot of different directions we can go in. Yeah, I'm definitely gonna have to get you on again, man. I think this has been a great conversation so far. But we're gonna segue a little bit, and what I wanted to talk about was I don't know if you've heard of this book. It's called Thinking in Bets by Ann Duke. It's a phenomenal book. But there's two statements in there that I really like. One is all decisions are bets, and life is poker and not chess. And this is more sort of referring to expected value. How do you think one becomes better at weighing out probabilities and determining expected value? Because we spoke about this already, right? We alluded to how you can go about doing that, but just for educational purposes, how do you think one can go about doing that?
First of all, like I haven't read the book, but I agree with the statement that life is a bet. In fact, like, just the field that we're in, deciding to go full-time crypto, deciding to trade like that for a living, that's a bet in itself. In terms of expected value, like I actually don't try to think a lot in terms of, okay, is this a positive EV or a negative EV bet? Because I like to use probabilities more, so I'll talk more in that regard. I actually
Okay,
believe that,
that's fine.
yeah, I actually believe that expected value is a little bit of an ambiguous term because it's really hard to measure that unless you're
I
working,
agree with
yeah,
you.
unless you're working on the quant side of things. So relative expected value
Yeah,
is different from expected value, right? So in terms of probabilities, I usually try to just go by the statistics and be like, okay, like what is the largest pullback that a particular asset has seen throughout this cycle, right? So that's one thing. In terms of like weighing probabilities for strategies, you just this is where documentation comes in. This is where backtesting comes in, right? So I feel like it's less about, okay, can XYZ work, and more about whether you have confidence in whether it'll work. So if you gather the right amount of data to back it up, you end up
hmm
having like an answer to your question, right? So for example, like you could s- get a new idea that I draw SR levels in a certain way. So if I draw like if I draw SR levels like this for the past 5 years, how many times has this been respected? So just going by that, I feel like
exactly.
you can weigh a lot. But in terms of like EV, that's just not something I focus on that much because I feel like it's all relative and a little bit ambiguous.
Yeah, I agree with you. I think it's relative.
I
Expect
mean,
when it comes to expected value. There's a lot of dynamic factors. So
yeah,
definitely like probability thinking in terms of probability. Go ahead.
yeah, I'm completely open to like having my view challenged because I believe that there are a lot of people who make it work for them, but it just hasn't worked for me.
Yeah, I think you can, do the simple calculation, but there's obviously, if you really think of it from a quant perspective, it's very dynamic in nature. So I think for the purpose of conversation, I agree. I agree with you, like in terms of like more so the framework of understand, like having the data to back. Because a lot of people, I'm sure you get this question as well, and I get this as well. Is like, oh, how do I develop conviction? I keep missing out on trades. I would have taken this trade, and it's like, okay, you need to have the evidence to back it up. If you don't have any evidence, how are you supposed to develop confidence in your
Exactly. Yeah.
strategy, right? And it just goes back to what we were talking about before. Is like it's very important to have the evidence to back everything up. If you're trying something new, um, I tell people, hey, just throw in a little bit of money into a sub account, and if you wanted to try a new strategy, you need to have enough data points to understand how the probabilities work in your favor or against you. And that's really what it boils down to, in my opinion.
Yeah, I agree. And also, just I think it helps a lot to change your mindset from a fixed risk to reward to evolving R. So,
Evolving R, yeah.
Yeah, so in terms of like trade management, when you start off, I think okay, like it's good when you start off to have fixed rules that okay, this is my entry, this is my stop loss, this is my target, and you have to get out at your stop loss or you have to get out at your target every single time. But as you spend more and more time in the markets, I think having the concept of evolving R, irrespective of what time frames you're trading or what assets you're trading, really helps. So that's about it because
Yeah, absolutely.
just to give you an example, like this happened to like a mentee of mine, just a guy that I was working with and helping him on his trading journey, and this was back when Ethereum was getting its ETF announcement, and the guy
Hmm.
refused to sell below 4,000. Like he had an entry at like 2,500, right? And we went like we wicked till 39 something, and like immediately we went back to 3,500. If you remember, like price action was really crazy. Like in one single like candle, we went to
Yes.
39 something and went back to 3,500. So and the guy had a $2,500 entry, which was basically full porting into Ethereum, and he refused to sell. so
Mhm.
you know
Yeah. Yeah, it's
exactly. So
this stuff I think you learn with time, like okay, 4,000, like if you just think about it, that round number is something that you immediately should have. You should have like a siren in your brain going off saying this is going to get front run, right? Like, so it's like and I see a lot of people using like pixel perfect like lines and stuff, and I talk about this a lot. Like, just have areas versus like that's not how the market works. Like, maybe not, especially not Bitcoin or this space, right? Maybe you can get away with that on ES, and I don't know what your thoughts on this are, but I generally like to look at areas where I then dial in and look at specific behavior in real time versus going off of a line on a chart.
yeah, exactly. Because
Um,
just because you draw a line on the chart doesn't mean that the market will respect it. So
yeah, the market doesn't give a fuck. Like,
exactly.
you know,
So you have to think of levels as zones, and that's where evolving R comes in. Even if you have like a fully mechanical trading strategy, even then you have to think about evolving R, and you have to think about trailing stop losses or maybe not having fixed
yes,
stop losses if you can afford
yes,
to like be near your system. So it's just if we talk about expected value, I think it's important to talk about evolving R and just go from there.
yeah. I mean, we spoke about this enough, but I'll just add to that. I think the market is dynamic, so your strategy and how you view the market needs to be dynamic in nature. Like, you can't be static. And maybe to start off, like you said, as a beginner, that makes things simple, and you can, that's how you can start off. But eventually, I think it's important to think about everything in a very dynamic, with the dynamic
Hmm.
mindset. That's what I would say.
Yeah,
So before we were talking about, you mentioned the book, and this is one of my favorite books that I've read. It's called Best Loser Wins
yeah,
by Tom Hoogard, and talks about the importance in terms of how to accept loss and not have your ego tied to the outcome. Right? What qualities do you think, in your opinion, are important for a trader to be successful? And also, from what you've seen, what are some weaknesses that lead to people blowing up their accounts or having to walk away completely?
yeah. You you brought up best loser win, so I think if I'm not wrong, it is a quote from that book, or maybe it's a quote from Market Wizards, where it goes somewhere around the lines of anything in life worth doing is worth overdoing. So uh, I think one of the best things that you can do for yourself, even if you're not a trader, like regardless of what you do, you have to be obsessed with your craft. You have to be obsessed with what you're
Hmm.
doing. And people often call this like being locked in. And that's exactly what I'm saying. Like you have to be obsessed with it and you have to fall in love with it. You can't half-ass it. Obviously, everyone wants to make money. I think every single person who entered financial markets or who trades for a living cares about the money first, but you also have to fall in love with it, right? You have to immerse yourself in it completely. And the people who end up losing on a long enough time frame, of course, short-term losses can take place, and there's a lot of ways we can work on that. But I think there are a lot of people who trade markets or continue to be traders for 5, 6, 7 years, maybe decades, and they're never successful at it, right? So I think the major difference is in between people who fall in love with it and who look at it as a craft versus people who only look at it as a money making enterprise. Like, I think money is a byproduct of good trading. It's not the main product. The main product is just improving yourself constantly. So it's
Yeah, absolutely. I think it's very like process versus outcome, right? And I think obviously like
exactly.
it would be naive to say that we're not here to make money. Obviously, we're here to make money, but it's like you said, the byproduct of focusing on the process is the outcome, right?
Yeah,
And I think there's this quote, and I'm trying not to butcher it. It goes something like, "The man who enjoys walking gets further than the man who wants to get to the destination." Um,
exactly.
and I think the same thing tracks whether it's trading or anything else. I think if you're not really obsessed with the process itself, it's going to be really difficult to go really far in that area.
Yeah, and also like if you're just starting out, I think having like a balanced a lot of people are going to slaughter me for this, but having a balanced lifestyle is actually really bad for you. Like, if you're young, like I wish I was fucking 22 right now and I could spend all day just sitting in my room and just doing things better than I did back then. But I think, the most important thing and the most valuable thing you have is time, and it's important
Hmm.
to use it wisely, especially if you choose an occupation, if you choose any career whatsoever. You have to give it as much time as possible, and at the same time, like this entire mentality of, okay, if wake up in the morning, work out, uh, eat in a proper, like eat proper meals and have like a proper routine, wake up at the same time every single day, sleep at the same time every single day. Like, that works when you are already in a comfort zone. It doesn't
Yes.
work when you
Yeah.
are going to college, hiding your laptop under the desk so that you can trade during classes, and then coming back home, doing your assignments, studying for fucking finals, and then you're actually, when you're sitting in an exam hall worrying about the trade that you have on versus what you're actually writing on a piece of paper. Like, that's not a moderate lifestyle, but I think that's what got me where I am right now. So
Yeah. You know what? Sorry. Go
yeah,
ahead. Go ahead and
that's
finish.
all I'm saying. Like, you just don't worry about that stuff, because there's a lot of people who tell me that, oh, I'm going to the gym and I'm also trading and I'm writing down my feelings for the day and other bullshit like that. And they're like, oh, why isn't this working? It's because you did not fall in love with the craft. You fell in love with the lifestyle. You want to have that lifestyle where, okay, you sit in front of a screen for 2 hours a day and you make some good money and then you go back. But that's for people who have already spent 2 decades hustling and grinding their ass off in the market, and now they're at a position where they can feel comfortable, scalp a little bit, and then have a balanced lifestyle. So that's just what I'm saying.
Yeah, absolutely. I think I agree with that. I've actually mentioned that in almost every episode. It's something I bring up is, I've studied people from every realm, whether it's markets, whether it's sports, whether it's athletes, whether it's, successful or the best in different areas. And there's always a common thread. The common thread that I've found is they're almost unhealthily obsessed with their craft for a certain period of time, right? And that's, in my opinion, that's what it takes to get really good at something. And you could say it's unhealthy, but that's, in my opinion, it's just something that's required, and it's natural when you really love something or you're really curious about how things work. You're going to be spending a lot of time doing that thing
Yeah,
naturally. And it's like you said, once people get to a certain point, then they talk about balance, And yeah, balance is great and all, but I think initially, or once until you get to a certain point of mastery, you really need to put in the time. And yeah, you said people are going to butcher you for this, but I'm honestly, like, I'm in the same boat. I think that's how I started off. I spent a lot, like, it was almost unhealthy to an extent in terms of how much time I spent um, in the market, and studying stuff, and trading, and looking at different things. And yeah, I honestly think it's a necessary step for most to have to do that, and
Yeah,
it's natural as well
yeah,
if
because
you want to
it
get
was.
far.
Yeah, you know how they say, like, it takes 10,000 hours to become a master at something, right?
Right.
So you could do that in, essentially speaking, you could do that across 20, 30 years, or you could do that in a couple of years. So
Right.
it really depends on that. And also, the more time you spend in the market, the more you realize how certain nuances work and when they change. So if you're not observing the market on a daily basis, it's actually difficult to get caught on when you do come back to the screen and when you do look at certain data points, because you don't know where to look. Some things change all the time. Uh, just to give you an example, like in before 2024, like before the introduction of ETFs, just looking at CBDs and delta was a very I would say, like, it was just looking at divergences there was actually pretty effective. And now it's not so much anymore. You can't just look at taker flows. You have to look at maker flows. You have to look at, like,
Hmm.
the cross exchange spreads. So it just changes. And the
Yeah.
more time you spend obsessing over this, the more time you spend dreaming about markets, the better you get at it.
Yeah, absolutely. I think it makes you better at being adaptable, and looking at different things through different perspectives. So, yeah, definitely agree with you there. Okay, so we're gonna pivot a little bit, and what I wanted to do was ask your thoughts on the market. Um, yeah, we don't, we're not doing predictions or anything, but what is your view on, like, the next few weeks, and perhaps if you thought long enough in the next few months, or if that's how, some people have, like, a time horizon of months. Everyone views markets differently, but I wanted to get your thoughts on that. What do you think is coming up in the next few weeks, and then longer term if we're talking months?
Yeah. So I think we are pretty much at an inflection point for markets where it's summer seasonality coming in, especially for altcoins, because uh, as I said, like, they don't have price agnostic bidders, right? So the altcoin market, the others index, it still hasn't broken all-time highs from 2021, while Bitcoin has broken it like twice, and it's almost at like twice the market cap than it was back then. So for altcoins, I think it's going to be a mediocre bull market where, where you have certain sectors pumping on a rotationary
Yeah.
basis rather than a rising tide that lifts all boats, especially
Hmm.
for the summer. For Bitcoin, I am inclined to believe that we just eventually drift higher. It was, I think, like, this local top was actually one of the easier things to call, but then the
Yes.
difficult part right now is whether you bid between 100 to 103K or you wait for mid
Hmm.
90s. That those are my two levels of interest, just based off volume profile.
Yeah, I'm in
So,
the same boat.
but
Yeah.
eventually, I think the Bitcoin playbook, especially on a treasury basis, is just starting out. Uh, MSTR has an insane amount of capital ready to that they are ready to deploy. I think it depends a lot on whether they can hold up their premium for the summer. If equity upside remains capped, I think they are going to deploy smaller clips, which they've started already. But GME still has like $4 billion in cash. Meta Planet are just starting out. I think the Trump media company just started out, like, buying Bitcoin. So there's a lot of people just pouring money into Bitcoin. So I don't really believe that we're going to have like a forever top that a lot of people are expecting. Right now there's there are still people talking about a black swan or us going into like a proper market top. If we do pull back, I would be happy to buy dips, especially on Bitcoin. But I believe that at least for June, we drift a little bit higher because we have momentum on our side. We just had our first real pullback since I think 85, 84K.
Since the 80s. Yeah.
Yeah, yeah.
Yeah.
So it's nothing to panic about, to be honest. I think you should focus on buying dips. And especially in June and July, I'm expecting on-chain to kind of take off because what used to be alt season is essentially just has been taken over by on-chain season, right? So it's a lot of different chains coming up right now. You have Hype that is doing a lot of good stuff with their EVM. So maybe we have a few runners there.
Hmm.
Solana's always there as well. So I think it would be if you have a smaller portfolio, I think you focus on chain season for June and July. Uh, and for a larger portfolio, if you can afford to kind of size up and just play it level to level, I think Bitcoin remains the play.
Yeah, absolutely. I generally agree with you as well. I think it's really difficult to bet against Bitcoin in the longer time frame horizon. When it comes to alts, my theory is like has been get on one station and get off when when things start diverting. It's just basically station to station plays, really. And it's like you said, it's like depending on what sector is hot at that moment in time, you might get some momentum driven moves for a certain period of time. But it's basically just various rotations when it comes to that. So speaking of like alts and on chain, you mentioned on chain might get hot in June and July. I think there's a lot of thoughts around from what I've seen around. Hey, like this is a last cycle in crypto where you can make it big, and I don't fully know the context of this, but I'm assuming it has to do with gambling on chain or alts for that matter, because obviously last cycle was a little bit different when it comes to how alts were behaving. What is your general thoughts on that in terms of how crypto might change as a space in the near future?
I think now is one of the best times if you want to be a trader. It's going to be a horrible time for you if you want to be a holder. So I think
Right.
we touched on this a few minutes ago as well, where I said that you the people who end up losing are the people who don't want to change and who don't have the curiosity. Like if you are copy trading people instead of learning their strategies, you're going to lose, right? So that's just the key factor. So if you want to be a trader, I think it's actually one of the best times because we are still a maturing asset class and there are so many trading opportunities that have arisen now because of different flows in the market. So that's one thing. But if you want to be a holder, I think it's going to be a painful ride for a long, long time. You know, because
Yeah. Yeah.
because especially for like on chain, it's I believe it's still a barrier. So if you can develop an on chain edge, I think you can still make a lot of money there. There's still a very strong barrier for a lot of people that I know who absolutely refuse to go on a DEX and they hate the DEX trading experience. In fact, I feel like there's
Hmm.
a big market there for someone who can simplify that process. I think there are a few projects already. I haven't really looked
Right.
into them, but what I do is just bid the leading coin and on the first pullback and then just wait. So we saw this with AI coins last year, where you had a big run. Everything collapsed after that, but that collapse is when a lot of new projects started building, and they were quick to ship. And then you had the second leg. So I feel like ICM could be that meta, where you have a huge leg up, which we just had, and then everything pulled back for a while. Now,
Hmm.
in the next couple of months, the runners can actually take lead again. Or maybe you have new runners coming up. Like anything that was launched in May, or that took off in May, launched earlier but took off in May, I think you want to pay attention to that on chain is not really my forte, but I like to dabble in and out there. So mm,
Yeah, I'm the same. Yeah.
yeah, it's like yeah,
Need to take
I'm not
advantage of it when things heat up. You know, it's I think on
exactly yeah.
chain
You
when
gotta
momentum builds up, you take advantage
yeah
of it.
you gotta scalp Bitcoin as much as you can, and you have to, because when you're running hot, especially on an asset like Bitcoin, I do not think you want to stop. You just want to have that winning streak, because on a long enough time frame you're going to lose, right? So I think that like at one point you have to lose. I don't believe that there's any trader who, yeah, any discretionary trader who can go on like a 40 trade win streak. You're gonna have a loss somewhere. But if at this point, which I actually truly do feel in sync with the markets, so if I feel in sync with the markets, I have to get up every
You
single
have to
day
milk it.
and
Yeah,
exactly.
yeah.
So I want to keep doing that. But in terms of the on-chain season, I feel most of the money in alts are going to be made in on-chain over the next
Hmm.
1 or 2 months.
Okay. Yeah. Thanks for sharing that view. I think what we'll do is now pivot to audience questions. We'll see because I posted something on Twitter, so we'll go to
Mhm.
those. But I'll just ask one based off of like a question that I typically get for to ask people is like, what advice would you give to someone who has a small portfolio and they were starting off today? Like, where do you think what do you think they should be doing?
Uh, depend, to be honest, it depends on what you consider a small portfolio, right? But
Yeah, it's relative. It's obviously relative, right? Like it's relative. But let's say someone just starting off and they have, well, let's just say they have four or five figures. Like
yeah,
let's say four figures, five figures. Like what general advice? I mean, we don't have to give them specifics. Where this is not financial advice, by the way. This is for entertainment purposes only. But yeah, any advice, any advice that you might have for people.
yeah. If if I say something and you lose money, just contact Stoic and he'll refund you.
Yeah, no,
Uh,
yeah, right.
but I feel for someone starting out right now, the best thing that you can do is just trade a limited number of assets, try to gain edge there, and once you can get consistent, I think you should get funded. That's I did not go that route, but I know a lot of people who took that path and they ended up being really successful. And as of right now, you have a lot of tools at your disposal to have a public portfolio that is verifiable. So it's actually pretty easy to get funded if you're good, right? So I'm not saying that, okay, you have to go to the prop firm route, which I haven't been part of the prop world, but I believe there are very strict restrictions and it's not for every trading style.
Hmm.
But even if you have a small portfolio,
Right.
let's say you have $5,000, right? So if you have a $5,000 portfolio, I would suggest until you're confident, trade with $1,000. It doesn't matter. Trade with $100. It doesn't matter. But trade with real money. Don't trade on what do you call that? Like paper trading mode on,
With the
yeah, on
paper, what is
exchanges.
it?
Yeah,
Sims? Yeah, paper
yeah,
trading. Yeah.
I think there's some term for it. Don't paper trade, because then you don't actually realize the emotions and the psychology aspect of things when you do that. So don't paper trade.
Yeah,
Trade with
it's
actual
a different
money,
ball
but
game.
it should be a
Yeah.
fraction of what you have. You should always make sure that you're secure in your everyday life, even if it's a modest living, depending on where you come from. If you're in Asia and you have, let's say, I think maybe $2,000 a month or something. So if you have that kind of money, or if you have $1,000 a month and you can live comfortably, that has to be a priority, because I do not believe that when you're starting out, I don't think it's a good idea to be stressed about making income from trading. Once you get good enough, connect your
Mm-mm.
Bybit or Binance, whatever exchange you use, connect that account to CoinMarketMan, have a verifiable portfolio equity curve, and just approach the right people, get funded, maybe open a hyperliquid wallet, or maybe once you get confident enough, you can purchase a prop firm challenge and grow through there. If you want to be a trader, and if you just want to make as much money as possible from crypto, I would suggest look into smaller edges that a lot of people don't care about. For example, a lot of meme coins, they have opportunities in DLMM, which is just market making on a DEX. So if you find coins that have cyclical behavior on a DEX, you can do market making there and you can make good money. It's not something sustainable, and I think as more and more attention moves towards there, your edge will get depleted 100%. But it's a way to make good money if you have a smaller portfolio. Uh, and also, if you can develop an on-chain edge, even if it's just tailing wallets. A very good friend of mine, like he started off with, I think, I don't know, man, like 40 50K. This was back in 2024, early 2024. And the only thing he did was find out the best traders on chain, like the best wallets that he could track, and then he copy traded them. Some of them he counter traded, and he's at like I believe he's at seven figures right now. So just look for those small edges if you want to make money quickly. But if you want to be an actual trader, take the first path.
Yeah, absolutely. I think that was phenomenal advice, and I think the one thing that you
Hmm.
mentioned is like not trading from a place of necessity, because I think that really works against you. If you're looking to make a salary from
Yeah.
this and you don't have much, it's really easy for you to fall into tilt, and it's working against you. Like your mentality is going to be working against you. So I think you mentioned this earlier, like having a stable income is probably really important before
Yeah.
you approach the market, and especially if you don't have a lot of money to begin with. I think approaching it from a mentality of, hey, initially you're going to pay some tuition. You need, in the process of learning, think of it as you're paying for a course that you're going to learn,
Yeah,
right? And so I
I
think,
don't think, regardless of who, even if you're mentored by the best trader on planet Earth, I don't think you can start off being profitable, right? Especially
yeah,
the
exactly.
the fastest that I've heard anyone be profitable on a consistent basis trading. Like a lot of people get into crypto and they think they're a genius in in the first couple of months, and then they end up losing it. But I think the fastest I've seen anyone become a profitable trader is maybe 4 months or 5 months. So you're going to have to struggle. So make sure that you have a cushion of safety, and that's because I don't come from money myself, and I've had a job since I was, I think, 16. So just do something. It doesn't have to be something phenomenal. Just enough to support you, right?
Yeah, exactly. Marathon, not a sprint, right? And I think, yeah, a lot of people like I've gotten messages, oh, like should I go full time? And I'm like, okay, well, I can't answer that question for you. I don't know what your lifestyle is. I don't know what if you have any money or what you're spending and all that stuff. So obviously, it's very discretionary in nature, but we can just offer whatever logical sound advice that we have in terms of like having something, not approaching it from a place of necessity will probably help you
Yeah,
out in the
yeah.
beginning for sure. Um, Okay, so you've definitely answered that question in detail. Let me see if we have any comments here.
Yeah, just let me know if you want if you want like more concise answers.
No, no, no. This is good. This is good. I think this is great because people listen into these for educational purposes. So I think
Yeah.
we've had a great conversation. I hope like people are enjoying this as much as I have. Let's see. Favorite setup. I mean, it's not a really great question, but if you want to answer this favorite setup, I mean,
Uh, uh, it's actually pretty difficult to answer. It depends on
yeah,
the environment. In
yeah.
Yeah, like if you want to talk about like okay, mm, favorite methodology, I would say it is. like something that I enjoy a lot. It's not necessarily like my most profitable strategy. Is just trading altcoins that have like scammy market makers, and they, like something like Ohm, it just went down like 90% in a single day. So like trading coins like that has been really fun, wherein you can track them via AGGR, or you can track flows in them via Velo, and just try to kind of time the dump, right? And sometimes you just hit it out of the ballpark, and
Yeah.
you're expecting it to be a 2 or 3 hour trade, and then suddenly it's a 100-hour trade. So it's it's actually really fun, especially on the short side, to be honest.
Yeah,
Yeah,
those are always
especially
fun.
on the short side,
Yeah.
because
Yeah.
you I use anchored VWAPs a lot, especially for altcoin trading. So when you
Hmm.
see that there's been
Yep. Yep.
some sort of spot accumulation for a coin, that's usually for manipulation. Like what a lot of market makers end up doing is they buy on the spot markets over an extended period of time so as to not manipulate, like push price higher. And
Hmm.
then once they have enough inventory,
Yeah.
they push it higher on perps so that they can size up. Then they fill, yeah, and then they
On
fill
purpose. Yeah.
shorts because perps are always more liquid. It's easier to move the spot markets, and you fill shorts on perps, which is an extremely large size, and then you dump spot. So essentially, you're filling shorts, and then you're dumping spot right after that. And spot markets are much easier to move price on. So if you can catch one of those, it's a phenomenal experience. Yeah.
Yeah, those are pretty juicy. Um, okay, let's see. Where do you get your ideas from? Man, I thank everyone for asking the questions, but I think we need to up the quality of these questions. Where do you get your ideas
Yeah,
from?
it comes to me in a dream, man. Like I don't. Yeah,
Okay.
it-
I don't even know how you would answer this. I think this conversation answers your question. The whole
yeah.
conversation, if you listen to. Okay, what's the everyday routine? I think we'll come to the next section. I usually ask everyone what their routine is and all that sort of stuff. But
Mhm,
when scalping Bitcoin, what's the process? HTF, LTF analysis, order flow. I don't know how to interpret this question, but I guess general framework when you're scalping Bitcoin. Maybe you can answer that.
mhm. Yeah. So, well, my scalping at this point is very mechanical. Like I spend time. My execution is discretionary, but in terms of
Hmm.
what time of the day I trade, it's actually pretty
Yeah.
mechanical. Uh, So I'm active during the start of the US session. So like half an hour or 1 hour before the US session, I'm at my desk and I'm ready
Yeah,
for
it's
some
usually the best
setups.
time.
Exactly. That's when like
Yep.
volume comes flooding in. Uh, I check uh, cross exchange spreads. Sometimes I look at options when we're close to expiry. So when I'm looking at
Hmm.
options, I mostly look at which strike prices and the which expiries have the most volume on Deribit. For options, I don't think you need to check
Yep.
anything else, or maybe you can look at Paradigm. They have like a really nice channel with lots of good public info. So that's
Hmm.
yeah. So like start of US session, end of US session, during power hour, you just have to be prepared for that. During CME opens, so it's just scattered throughout the day. To be honest, like I log on and I see that okay, do we have some sort of setup here, and as I said, like
Yeah.
you do a lot of documentation so you know what percentage moves you can expect, so you never end up holding for too long. When I'm scalping, I don't turn my scalps into swings. I have a certain percentage range of move that I want to capture. Once I get that, I get out, even if it's something as small as 0.3% or 0.4%. you you
Yep.
you get in, you get out, and
Yeah.
that's about it.
Yeah, absolutely. I think you mentioned this before too. A lot of people fall trapped to that, and I did initially as well, where you're executing, like depending on your idea, you get lost in the sauce. Where in terms of like, okay, this was a longer time frame idea, and you fumble it on lower time frame execution. And keeping sight of that and understanding what. what your execution is and what your idea was and what you're trying to get out
Yeah.
of it is really important. Um, okay, so there's two other questions on here. How do you think the trend will play out with? I think you touched on this earlier too, but how do you think the trend will play out with respect to trading on a centralized exchange versus a decentralized exchange?
Uh, yeah, I think decentralized exchanges end up doing well. And centralized exchanges, I think the jig is up, like unless there is monumental change, which I believe we're seeing a lot of it already. It started post FTX, and then we had a lot of focus on what Binance is doing behind the scenes and what happens to coins when they list them, especially on futures. So
Hmm.
now things are improving, but the success of decentralized exchanges just tells you that okay, people want to trade on a DEX, especially as the entire point of crypto in the first place was decentralization. And now I think every liquid exchange that I can name has a mandatory KYC. So I think DEX trading actually keeps on increasing. Be it perps or on chain, doesn't matter. They will have more and more market share as we move further. Just because the experience has been so good, right? And over the past 2 weeks, we just saw someone executing billion-dollar positions
Yeah,
on a
yeah,
DEX, and they did it without much slippage, to be honest.
yeah. That was good marketing for that as well.
Yeah.
Um, All right. The second question. We've seen DEXs venture outside of crypto with Forex commodities and RWA listings. What are some factors that you think would accelerate/ decelerate the adoption for TradFi traders?
Uh, I mean, to be honest, I don't think I'm the best person to answer this. I think ETFs coming in and CME futures rolling in was probably the biggest catalyst. And now we have more and more CME futures coming in. Simultaneously, I think one thing that's going to be big for TradFi traders is when we have options markets built on top of existing ETFs. So if IBIT, for example, gets an options market built on top of it, I think it's going to be really important to get some TradFi guys in.
Yeah, absolutely. Um, let's see if there's anything else here. I think that's pretty much all of it. Okay. Okay, so now that we're through the audience questions, I think the one section I usually have is just talking about people's like daily routine. What do you do for like health and fitness right now? If you do anything, um, yeah, what does your routine look like right now?
Yeah, so in terms of sleep schedule, admittedly, I am working on it. I promise. That's what I said to my family as well. But my sleep schedule is not that great right now. But I make it a point that I exercise every single day, and I keep changing it up because I do not like sticking to the same thing. Like I some people find. A lot of power in a constant discipline or like a constant thing every single day, but I try to keep changing it, it's, just like a hybrid athlete kind of stuff. So I just started
Hmm.
training some Muay Thai, and
Okay.
yeah, so like 2 days a week I do that. 2 days a week I go to the gym. Uh, on Sundays I usually have like just something fun. It could literally be anything. A few like last month I went to laser tag and I just did 10 rounds straight. So you could you could go to laser tag and get a good workout in, right? So that's kind of what I do. Like I try to have fun with it in terms of the fitness regime. In terms of daily life, one thing that has helped me a lot, especially something that relates to trading, is meditation. So you have to learn to sit with
Hmm.
yourself and you have to clear your mind of everything. Because I feel like the more time you spend staring at a screen, uh, the worse your attention span gets. So it's important to, I believe, meditate. It's important to journal. I did not journal about my personal life until quite recently, so that's something that I do. Mm, and yeah, I mean, in terms of the daily routine, I think because it's a 24/7 market, it's still pretty scattered for me, and I do dabble in equities still. So I'm really active when equities are open, which is usually, the US session itself. So I'm looking at crypto and equities simultaneously. But apart from that, just CME opens, I'm active. Sometimes I set alerts. I still have alerts that blast off in the middle of the night, which are price based. So, so it's that I
Yeah.
no longer keep AGGR on while I sleep. Thank God for that. But yeah,
I feel like sometimes I still hear it in my sleep because I used to do the same. I used to have it. Yeah, I think it definitely some habits that we developed through trading in a market that's 24/7.
yeah,
Like I had to like deal with like insomnia and stuff, and I had to really fix all those things. Um, but yeah, some things do stick. Sometimes I feel like I wake up in the middle of the
yeah,
night and I'm still hearing Agger in my head. But I think, yeah, one good thing that you mentioned is, you don't have to be at your screen all the time if you know what you're looking for in terms of like general areas, like setting alerts. Like I'm a huge advocate for that in terms of setting alerts, being able to like walk away from the room where your screens are if you need to, and um, I think that can be really helpful as well. That's helped me out at least a lot.
yeah.
So, but I
And
think what
also,
you
like,
mentioned in terms of
I think one thing that you can add to your life is uh, like an Apple Watch. Just get, or whatever, like whatever you prefer. Just get a nice smartwatch so that you can get your trading alerts without even looking at your phone. I'm trying to reduce my cell phone screen time a lot. So if you can have a smartwatch, it also tracks a lot of personal fitness data for yourself. And then at the same time, like the only thing that you should have on there is maybe your trading view and your Velvo alerts. So the moment you get that, just go over to your desk and get shit done.
Yeah,
And
absolutely. And it
hmm,
was funny because I just thought of like there was like a pillow that I don't know what exchange had this, but you could literally like the pillow would fucking vibrate like when it hits your alerts. I'm just cracking up because I'm sure some people some crazy people are using that shit too. But yeah.
yeah, I mean, if you're trading on 40x leverage, yeah, get a pillow. But yeah,
Yeah, but I think what you mentioned is great, in terms of meditation, journaling, like mindfulness, I think is really important. And in terms of attention span, I found that as well. Like after, spending so much time in front of a screen, it almost feels like I started feeling like I couldn't focus. Like I used to be able to read entire books, and then it came to a point where I was like, holy crap, I can't focus. Like I have to reread the same
yeah,
page like a couple of times for me to understand what's going on. So I think all those things are very important in terms of keeping sane for sure.
yeah.
Um,
And also, it helps
all
with
right, so we're coming.
it helps with creativity, right? Because there is a creative side to
Absolutely,
this. So if you,
absolutely.
yeah, so you have to do it.
Yeah, absolutely. I think if you want to do it in a healthy way, after a certain point in time, it's good to start incorporating some form of balance. I think sleep is definitely something that a lot of people that I talk to, at least when they're starting off, and it's something that suffers because of the market being 24/7, especially when there's certain environments that you're looking to take advantage of
Hmm.
for a certain period of time. But it's always good to sort of balance some things out because I think sleep is probably one of the most important things, right?
Yeah,
Like doing away with sleep can like for long term health is definitely pretty detrimental. But yeah, everyone has their own way of approaching things. All right, so I wanted to come up on the last section of the conversation, and I think this we've talked about so many different things. I would love to have you on again for sure for a second part in the
yeah, I
future.
had fun. Yeah.
Um, what yeah, this was great. Are there any general advice? Like, it doesn't have to be trading related. Any general advice that you have for people that are listening in?
I mean, we've touched upon this as well. Like the general advice I have for every single person is just be curious. You have to be curious. You have to keep learning. And one thing I would say is do not like differentiate. Like talk to as many people as you can. Do not disregard people just because you don't value them the same as someone else. because even a losing trader can give you very valuable insights into how to counter them. So, because one of my closest trading friends, his name is Zeke, shout out, but he made a lot, like he just made like 3 4x on his entire portfolio over the past year just by finding losing traders on hyperliquid and countering them. And yeah, I'm not even talking about, okay, he looked at their trading idea or he looked at their position and countered it. He straight up built a bot and countered their position 1:1. So,
That's
so,
great.
so it's
That's
yeah, so
great.
it's just curiosity, and to me that's like the most insane idea, and I was like, why did I never think of that? So just be curious.
Yeah.
Also, like build things. Even if you're not like technologically inclined, right now you have all of the tools at your disposal. So for me personally, I have some custom alerts built up, which I have connected it to a Telegram bot. So I get like custom alerts based on that, and it's mostly just price level alerts, but also mixed with volume and sometimes with VWAPs. So I think the best thing that you can do, continue building, continue being curious, look for the most insane ideas. If you want to look for trading signals in astrology, like actually do it. Just actually do it. And just try everything, and that's the best advice I have.
Yeah, no, that's beautiful. And I think it comes back to what we were talking about in terms of creativity. Like there's so many different ways that you can approach the market. You don't have to be static with it. And I think the one other thing that you mentioned that I really like is you can learn from everyone. Like there's something
Yeah.
to be learned from everything. So as long as you keep an open mind, you don't have to embody everything that someone does. You could pick elements of it
Mhm.
that work for you, right? And I think that's something that I've done a lot is like, hey, like this person is doing things this way, let me try it out and see if this works for me. What do I like about it? Maybe I don't want to do it, but you're not going to know until you have an open enough mind, or you're flexible
Exactly.
enough to
Yeah.
pick up on that. Okay, so what are some Twitter account? You do have any account recommendations? Because I'm definitely looking to have more of these conversations in the near future. Is there anyone that you would nominate for an episode? I mean, it could be more than one person for an episode of Perpetual Perspectives.
Uh, have you? I think you already had him on. Like Giver is an account that I really
Oh
like
yeah, yeah, I've
enjoy.
had him on.
He came up
Yes,
quite recently as well, right? So
yes, yes.
yeah. So people who have a more macro outlook to things, I believe are like really good to have on. But I believe you already had Giver on. Maybe Runner XPT and what he's thinking about the markets right now, because I think his trading styles, especially in regards to trading BTC, is very similar to mine.
Hmm.
Uh,
Okay.
yeah,
You can, and
I-
also like you can send some names over afterwards. Like
yeah.
we can just put it with the episode, so you don't have to give me all of the names. But yeah, if there's anyone you think that would make for a great conversation, feel free to let me know, and we can throw. I can
Yeah,
ask them.
I'm actually trying to think of names like who would agree to speak, because a lot of guys they don't even like
That's
they
the
don't.
other thing. Yeah, it's hard to get people on that don't want us to speak as well. So
Yeah, because I think the one person that I 100% would like to have would listen to a podcast with him speaking would be Smartest Money, but I've
yeah, you don't think I've tried that already? I've definitely tried that. Yeah, yeah. There's some people that are not going to do it, and I respect that. Because it's privacy and all that other stuff. So
yeah,
that's
exactly, yeah.
completely understandable.
Yeah, because SM, like I've been speaking to him for like 2 years now. I think 2 or 2.5 years
Yeah,
now, almost every single day. I've never heard what the person sounds like. So,
yep, yep.
yeah, but yeah, he's definitely one person that I'm interested in listening to his journey and how he came up. Maybe as of
Well,
right now,
I.
why not bring like James Wynn on or something?
Oh my god.
Imagine
Oh
the
man.
views.
Yeah. Right. Right. Hey, it's worth a shot. I'll DM him. I don't care. I'll DM him.
Yeah, yeah.
Um. All right. Is there anything that you'd like to plug? I know you have a YouTube channel. If
Yeah,
there's anything else, I feel like.
I have a YouTube channel, but I think more importantly, I have a Telegram where I usually do a lot of trading workshops in. So
Okay.
I share my live trades in there, but then I also do like workshops where I give people trading ideas, and then I want them to come back to me with insights, and I make sometimes I make videos about it and just kind of work on new strategies along with everyone in there. We have like 7,000 people there already. A few of them, they've been in the Telegram for over a year. They've been profitable traders. I mean, I don't charge money for it. It's just completely free, but it's a collaborative effort. So if anyone wants to come on and work together on new strategies, on finding new edges, I would recommend it, to be honest.
That's really commendable. And that's the Telegram link is in your Twitter bio.
Yeah,
Do you
it's in
have it
my
on there?
bio. Yes.
Okay. Okay. So yeah, definitely go check that out if you're listening in. I think that sounds amazing. I might jump on there myself to see what's going on in
Hmm.
there. But I really appreciate you taking the time to have this conversation with me, Billy. I know it took us a while to organize this, but I think it was definitely worth the wait. And I hope you enjoyed the conversation as much as I did. Would love to have you on again.
Yeah, of course, absolutely. I mean, this is my first podcast. I think we actually went a little bit deep on many regards, and I really appreciate you having me on, especially with all of the people that you had on
Oh, your
already.
voice got cut
Like
off at
I've
the end.
really enjoyed listening to past versions of this podcast with Horse, with Giver, like so many other people. So
Yeah, I appreciate it, man. So usually I end this on a thought-provoking note or a statement, and the one quote that comes to my mind right now is this quote by Bukowski, and it's "What matters most is how well you walk through the fire." So to everyone listening in, I hope you enjoyed this conversation as much as I did, and that you're able to take away some actionable items or things that you can look into or consider to improve upon. Until next time, thank you.